Before we break down the elements of an option, let's talk about what makes options a viable alternative to stocks. Options investing revolves around three basic ideas: flexibility, ownership, and leverage. First up, flexibility. When you purchase a stock, there's one way to invest. You can purchase a stock you believe will increase in value. That's it. If the stock rises, you make money. If the stock drops, you lose money. Options investing is the free-form jazz of finance. You can pretty much tackle it from any angle and still succeed provided you know what you're doing. Think a stock is about to plummet? Options will let you play the fall. Expect a company to hold steady? Options will let you invest in sideways movement too. Number 2, ownership. Buying stock makes you a direct owner of that company. When you invest in options, you're not purchasing an owner's position, but you are purchasing control. It's known as synthetic ownership, a type of control that still allows investors to reap the same rewards as owning a stock outright. You'll discover that when a stock price rises, the corresponding option rises too. In other words, when you invest in options, you may not directly own part of a company, but you do have a stake in its future. Finally, and maybe most importantly, there's leverage. Buying a stock is a one-to-one transaction. If a stock costs $50 per share, then you can pay $50 and get a single share. By comparison, the price of an option is based on factors that go beyond the current trade price. Once you know where and how to look for investments, you'll find that some options cost much less than stock. Let's say there are two investors. Investor A buys 100 shares of stock at $50 per share. They'll spend $5,000 for their investment. Meanwhile, Investor B uses strategies employed by ROI and buys a single option contract at $25 per share. Their total cost will add up to $2,500 because option contracts always come in bundles of 100 shares. Keep that in mind. When you're calculating the total cost of an option contract, you always have to add 2 zeros to the share price. Now the stock goes up $10. Investor A has 100 shares of stock valued at $60. His investment went from $5,000 to $6,000. That's a $1,000 profit and a 20% return on their investment. Because she's an ROI user, Investor B's investment goes from $2,500 to $3,400. She earns a 36% return on her investment. That's 80% more money than Investor A. Same research, same company, same time frame, same stock movement. Wildly different returns. Sounds incredible? That's the power of option leverage, a power we can teach you to harness. In future tracks, we'll demonstrate how ROI option strategies can result in these types of enhanced returns. Don't turn that dial.